Remember, we were told that the US dollar was going to collapse and be worth zero. And with the exception of the last couple of days, that hasn't been the case where the US dollar was sold off aggressively. So Bitcoin looks miserable, and I think it's going lower before it's all said and done. I don't trust rallies until we get a daily close well above the 50-day EMA, something that we are really nowhere near at the moment. Well, skyrocket again. This is Chris Lewis with your look at technical analysis and technical roundup for the session from Hola Prime. The gold market has skyrocketed a bit during the trading session here on Thursday, as we are just going straight up in the air at this point. Ultimately, this is a market that I think continues to see buyers on dips, but this is really difficult to just start piling in right here. A story that you may want to keep in mind is that I know somebody who has seen silver hit 50 twice. This is the third time. I think he's finally selling some of it. You do not want to get saddled with a move like this if it gets reversed. That being said, in the short term, it just isn't really showing any signs of exhaustion, and therefore I think you have to look at short-term pullbacks as potential buying opportunities. But I also recognize that we are so overstretched, it isn't even funny at the moment. $4,200 could end up offering support, I suspect. If we break down below there, then the $4,000 level is a large, round, psychologically significant figure that I think comes into the picture. We are so far beyond the 50-day EMA at the moment, about 15%, that it's not even a thing at this point. So everybody's leaning in one direction. It starts to get me a little nervous. Silver is even worse, as we find ourselves at $54 an ounce. And of course, this is a market that is obviously going to be very bullish. It's getting a lot of headlines, and I'm starting to hear people who are not traders out there talking about silver. Suddenly, everybody on YouTube is now a silver expert. And of course, I'm starting to hear people like my neighbor talking about buying silver. Meanwhile, I do know that typically when moves like this happen, the real money was made 6 months ago. That being said, that doesn't mean that you necessarily want to short this market. But if and when the bubble and the metal markets pop, I'm going to be aggressively short silver because it falls much quicker than gold. And that mainly due to the fact is that the central banks out there continue to buy gold as a safety asset and to shore up balance sheets. Quite frankly, silver just isn't that important, with the exception of there's a little bit of an AI connection these days and green technology, but still, watch silver. It could give you a heads up as to what's going on in the rest of the metals markets. If we do pull back from here, somewhere around $51 should offer support, and then again at 50, followed by 48. The $48 level for me needs to be held. If we break down below there, then I think the liquidation might be on. The euro has rallied pretty significantly during the trading session, and it does now look like the euro is trying to turn things around against the dollar again. That being said, we have to ask, of the previous uptrend line could offer resistance. It's a very important level we find ourselves at. We are technically testing the uptrend line. We'll just have to wait and see whether or not it can break to the upside. I don't think that this is a market that, if you're not already short like I am from the FOMC meeting, that you want to pile in right now. But if we break down below the low of the session for Thursday, that would be a pretty negative turn of events. Remember, we were told that the US dollar was going to collapse and be worth zero. And with the exception of the last couple of days, that hasn't been the case where the US dollar was sold off aggressively. So interesting spot. We'll have to see how Friday plays out, because I think Friday will tell the story. The British pound has rallied a bit during the trading session on Thursday to test the 50-day EMA. We broke above it and then we fell a bit. We are in the middle of a cluster right now, so it'll be interesting to see if that continues to cause some issues in that area. If we were to break above the 1.35 level, then we could open up a move to the 1.37 level. When I look at the British pound, we are essentially in a 500 point range with 1.32 on the bottom being support and 1.37 on the top being resistance. So that basically means that the 1.3450 level, basically where we're at right now, is fair value. That's where we're at. And keep in mind that the British pound has been one of the better performing currencies against the US dollar for quite some time now, but seems to be stalling. So we have to ask questions as to whether or not this would be a barometer as to what happens with the greenback. The US dollar did try to rally against the Swiss franc, but the previous trend line held as support for about a minute there, and now we've fallen. It looks to me like the dollar is going to continue to struggle against the franc. It's interesting that we see market participants continue to run to the Swiss franc. And I think with this being the case, I think what you've got is a scenario where the market is just pretty much afraid of everything, afraid of its own shadow. So we'll wait to see if the Swiss franc continues to strengthen. If it does, that's a bad sign for other markets. I'm not necessarily looking to get aggressively short here. It'll be interesting to see if we can bounce from the 0.79 level. That would just repudiate the idea of felling off, and it would just really kind of confirm the idea of sideways base building. The US dollar has fallen pretty significantly, so the question now is, are we actually going to see the market and whether or not we are going to try to fill this little gap? This gap, I think, may end up getting filled. We'll have to wait and see. At one point, it looked like the 151 yen level looked like it was going to offer a little bit of support, but really at this point, it looks like we're going to just blow past that. 150 yen gets targeted, and then after that, it could be the gap. The US dollar selling off, I mean, I'm not overly concerned about it yet. It's still just the pullback at this point. The Japanese yen itself is ridiculous. I don't know why anybody's worried about the Bank of Japan actually tightening monetary policy. We've been hearing that story for about 30 years now. So they will blink, as they always do eventually, and then the Japanese yen gets hosed. Now the question is this a bit of a risk-off move? That's possible. The US dollar fell initially against the Canadian dollar, but continues to grind its way higher. I think ultimately you've got a situation here where we are trying to break out to the upside, and the 1.40 level is very important to watch. If we can stay above that, I think it's a very pro-US dollar sign, and it could open up a move to where I think we end up one way or another, the 1.4250 level. It might take quite a while to get there. After all, this isn't always the fastest moving pair, but breaking above 1.40 opened up the path to that level. You get paid to hang on to this, and we did just get the so-called golden cross where the 50-day EMA crosses above the 200-day EMA, so that's worth paying attention to as well, as longer-term traders will look at that as a buy and hold signal. Short-term pullbacks at this point continue to offer buying opportunities, and I do not want to buy the Canadian dollar. And in fact, the Canadian dollar looks horrible against a multitude of currencies. This isn't even a US dollar story at this point. This is all about the Canadian dollar struggling. Ironically, the Australian dollar did try to rally a bit during the trading session, but over here, we've seen US dollar strength. If we break down from here, the 0.64 level is an area where a lot of people will be looking for support. If we give up the 0.64 level, then the market drops rather drastically. The 0.60 level is an area that I think we could find eventually. And it is worth noting that we'd been sideways for a while. We broke out to the upside and then broke back down into the middle of the consolidation range. If we break down below it, that would be a horrific sign for the Aussie. And quite frankly, I just don't think Asian currencies overall look that great. And if that's going to be the case, the Aussie will get pummeled. The New Zealand dollar rallied enough to touch the 0.5750 level, only to turn around and show signs of weakness. I think at this point in time, the New Zealand dollar could drop towards the bottom of the candlestick from a couple of days ago, near the 0.5680 level. If the market breaks down below there, I think it's got another 3% to the downside, which means we could drop to the 0.55 level. Rallies at this point, I think, open up the possibility of selling at higher levels, just like we've seen during the trading session here on Thursday. And really, at this point, this is a downtrend that's been pretty relentless. Every rally gets sold into. So even if we do rally from here, I'm still looking for an opportunity to get short the New Zealand dollar and buy the US dollar. Ironically, and most of you will argue with me about this because you don't understand the euro dollar system, there's actually a shortage of US dollars at the moment. That's why you're seeing swap lines being opened up in places like Argentina and South Korea. This eventually finds its way over to New Zealand and Australia and everywhere else as well. Looking at the euro, we did initially fall a bit during the early part of this session and break below the 50-day EMA, only to turn around and show signs of life. Ultimately, I think this is a market that I think continues to see a lot of back and forth action right around the 50-day EMA. The 0.8750 level is a major resistance barrier and has previously seen a double top. I think at this point, I'm still watching the moving average convergence divergence indicator and the fact that we have a bit of divergence. So the divergence, of course, is a negative sign. It doesn't mean that the market has to fall. But for a while now, we've seen the British pound outperform the euro as well as many other currencies, and therefore it wouldn't surprise me to see this thing fall. That being said, it's also worth noting that the pound is starting to get a little sluggish, so maybe we're just stuck in this range. If we were to break above the 0.8750 level, then the measured move has the euro going to the 0.89 level. The euro tried to rally against the Swiss franc during the trading session here on Thursday, but just like we've seen on Wednesday, the buyers are just not willing to hang on. We are sitting on pretty significant support near the 0.9250 level, which has been important for several months. Ultimately, I think this is a scenario that if we can break down below the 0.9250 level, the market drops down to the 0.92 level. I think that would also suggest that perhaps a lot of risk appetite is being eviscerated. Remember, the Swiss franc is considered to be a safety currency, while the euro is considered to be a little more risk on. Calling it a risky currency is a bit of a stretch, but this pair does tend to move in that direction. If it's more risk on, we tend to rise. We are sitting here at the bottom of a range, so if we can break the top of the last couple of trading sessions, that's actually a very bullish sign. The euro initially tried to rally against the US dollar, but gave back the gains to show signs of hesitation. Remember, we still have a major gap underneath that extends all the way down to the 50-day EMA. The gap has yet to be filled. I know on the chart it looks like it was. It wasn't. It's just a bad tick in MetaTrader. At this point, if we were to break down at this point, we could see a potential buying opportunity on filling the gap. And I think at that point in time, you probably see the Japanese yen get hammered against multiple currencies. The euro, of course, is a bit noisy at the moment, so that helps this be choppy as well. If we can break above the highs of the last 2 or 3 days, then I think you've got a situation where you could see the market go towards the 178 yen level. We're in an uptrend. You get paid to hang on to this pair to the upside. And I think that's what most traders will do. They'll look at these dips as potential buying opportunities in an otherwise very bullish market that is just kind of hanging out at the moment. The British pound continues to attempt to rally against the Swiss franc, but it continues to get pummeled. What I find interesting is the area right around 1.0650 has been like a brick wall. I think this is a scenario where if and when we finally do break down, maybe below the 1.06 level, then we could drop quite drastically. The market is going to continue to be a fade the rally market for short-term traders. But now you have to ask questions. Are we building some type of base? This has been rather impressive. And let's be honest, the Swiss National Bank has been known to dabble in the markets to keep markets afloat from time to time and do so secretly. Maybe that's what's going on here. I don't know, because this is such an obvious support level. And of course, the Swiss don't really like the idea of the Swiss franc appreciating too quickly. It does tend to wreak havoc on their exports. They have enough issues with that already. So I'm watching this somewhere around 1.0735 or so. If we could break there and then challenge the 50-day EMA, anything above that would be something I might be looking to hold on to. Short-term trading still favors the upside, but of course, if we break down below 1.06, not real sure where we go from there. There isn't a whole lot of information to work off of. I would anticipate probably a move to 1.05 because of the psychology behind that number, and then after that, down we go. The British pound initially rallied against the Japanese yen and then collapsed for no real apparent reason. There was a lot of volatility in the market today, again, for no real apparent reason. With that being said, this is a market that I think continues to see a lot of support underneath, especially near the 200 yen level. And in this environment, we could go to fill that gap all the way down to about 198.5 yen. That being said, I don't like to sell this pair. I like to buy it because I'm looking for interest rate differential to pay the trade to sit there and wait. I do think we try to get to the 205 yen level. And if we can break above there, then it's likely that the market really takes off to the upside. I think that ends up being the situation eventually. But right now, it just doesn't show any real lasting strength. The Canadian dollar continues to plummet against the Swiss franc, as there's just no hope for it at the moment. With this being the case, I think you continue to look at the 0.57 level as an area of importance. And if we revisit this area, it should offer a significant amount of resistance above. At this point, we're just falling right out of bed, and it does make quite a bit of sense considering that the Canadian dollar itself is rather beat down, and the Swiss franc, of course, is considered to be a safety currency. So this is a perfect example of one extreme to the other. The Canadian dollar continues to be reviled, and I think that will be the case going forward. The Canadian dollar initially tried to rally against the Japanese yen, but gave back those gains. So now it looks like we're going to hang out in this gap. The 200-day EMA sits just underneath, offering support. If we were to break down below there, then it's likely to go looking to the 106 yen level. I think at this point, if the Japanese yen starts to get hammered, this isn't necessarily the pair you're looking to buy. You'd be looking to buy the dollar yen, or maybe even better yet, the British pound yen. Just have to wait and see, but it won't be the Canadian dollar against the yen. The euro initially fell against the Norwegian krone, but then turned around to show signs of strength as we are above the 11.75 level. And if we can break above the 11.81 level, then it's likely that we will continue to see upward momentum looking to the 12 level, short-term pullbacks, I think continues to offer buying opportunities based on value. If we were to break down below the 11.65 level, then maybe the 11.55 level gets targeted. The euro is very noisy against the Swedish krona as we are hanging around the 50-day EMA, and I think ultimately this is a market that just doesn't have anywhere to be. This is very choppy, very sideways, and in this environment, I think you have to believe that maybe we're just range bound. Range bound trading is perfectly fine here. I like the idea of trying to take advantage of overbought and oversold. All things being equal, if we continue to see a lot of questions asked about Europe and Sweden, this is what we'll get. So short-term traders continue to love the euro versus the krona in both directions. The New Zealand dollar has essentially filled the gap against the Japanese yen. If the market were to bounce here, this would be an ideal setup, but keep in mind the New Zealand dollar is so weak that you have to be a bit cautious. There are plenty of other yen related pairs that have not filled the gap that may drive this pair down in sympathy. The 85 yen level is a hard floor in this market. If we break down below there, then I think the New Zealand dollar really falls apart. If we turn around and show signs of strength, breaking above the 86.5 yen level, then we could go higher, perhaps looking to the 88 yen level if we get enough momentum. I do not like this really at this point, and with that being said, it's an area of interest, so watch this very closely. The New Zealand dollar tried to rally against the Swiss franc, but has broken to a fresh new low, smashing through the 0.4550 level. Quite frankly, this is a market that just continues to drop, and I think that's the story here. Anytime we get a short-term rally, you're looking for an opportunity to get short. Kind of like anytime gold pulls back, you're looking for an opportunity to start buying. With this being the case, I think we have a situation where the New Zealand dollar being so weak that it just can't hold up its own against pretty much anything. So with that being said, I do continue to favor shorting this market, but I like seeing little bumps to the upside that I can take advantage of. The US dollar initially plunged against the Mexican peso, but it is fighting back. That's interesting. The 18.50 level continues to be an area of interest in general, and I think you have to look at this as a potential support and resistance area that will continue to attract technical traders. The 50-day EMA is sitting right around the 18.50 level as well. And of course, we've seen a couple of days where we've tried to break above there and just could not hang on to those gains. With that being the case and the positive swap for being short of this pair, I still favor fading short-term rallies, but if we break above the 18.65 level, we could open up the possibility of a move to 18.85, where I expect to see even more resistance. Anything above there, then I think you're talking about a trend change. So the oil market continues to fall apart. It's pricing in a depression, maybe. I'm not real sure, but the crude oil market is oversupplied at the moment. That, of course, doesn't bode well for pricing, as OPEC, the United States, and Russia all flood the market with supply. That being said, there are concerns about global trade. The trade situation continues to be very ugly, with trade tariffs being thrown around, and that, of course, means that we may need less in the way of shipping. If that's the case, then we need less in the way of oil, and that's exactly, I think, how market participants are looking at this. If we bounce a bit from here, I still see a significant amount of resistance near the $60 level. And quite frankly, I would not hesitate to sell a market that bounces into that $60 area and shows signs of hesitation. To the downside, it looks like the $55 level will continue to be important and something that you need to watch. $55 has served as a hard floor in the market. And I will say that on the longer term charts, if you look at $55, if we give that up, US oil is going to absolutely crater. It will be extraordinary the amount of just empty air there is underneath that level. So the NASDAQ 100 rallied a bit during the trading session on Thursday, but hit the 25,000 level and has just cratered since then. We could bounce a little bit heading into the power hour, but really at this point, I think you've got a situation where the market just doesn't really know what to do. And we've stayed within the massive negative candlestick from Friday when Trump started throwing tariffs around. And now we gapped higher to show signs of life. And now we're just going back and forth to show signs of hesitation. If we can break above the 25,000 level, then that would obviously be a very positive sign. We have an uptrend line underneath, but we also have the 50-day EMA right in the same neighborhood as well, so it opens up the possibility of a major floor underneath. The S&P 500 did break above the 6,700 level, only to turn around and show signs of negativity. The 50-day EMA sits right along the uptrend line, and I think if we drop from here, we could very well see support near these 6,550 area or so. If we bounce from here, then you have the possibility of the market going to the 6,700 level, which is where we've struggled to get above all week. It's interesting because just like in the NASDAQ, we had a major sell-off on Friday, and we just cannot break above the top of that candlestick at all, which is not a good sign. The Dow Jones 30 did break above the Friday candlestick during the trading session on Wednesday, but then fell, and now we're plunging as it looks like we are perhaps going to go down to the 50-day EMA. The 50-day EMA, of course, is an indicator that a lot of people will be watching, and if we can break down below there, then the 45,000 level ends up being a major target for support and those looking to short the market to see if we can find some type of floor. That's quite a bit down from here, but I do recognize that the market has seen a lot of volatility, and with this being the case, I think you've got a situation where we are just simply trying to form a certain amount of back and forth consolidation in this market. So, looking at the Bitcoin market, it had originally tried to rally during the trading session here on Thursday, but then gave back gains quite drastically. With this being the situation, I think you have to look at this as a scenario where traders are wondering whether or not the market will really lose the bottom here, as the risk appetite in a lot of different markets have been destroyed. $108,000 being broken in Bitcoin opens up a move to $105,000, and below there you're talking 100,000. Bitcoin looks miserable, and I think it's going lower before it's all said and done. I don't trust rallies until we get a daily close well above the 50-day EMA, something that we are really nowhere near at the moment. Ethereum tried to rally and then gave back those gains, as I think Ethereum has the same fate as Bitcoin, because quite frankly, anything that's not gold is having a hard time at the moment. Gold, of course, being the favored asset, and Bitcoin just looks horrible. So that's going to make even more pressure on Ethereum. Ultimately, I think this is a market that you're looking at short-term rallies to sell. If we can break above the 50-day EMA here, then I think, much like the Bitcoin market, it shows strength. When I look at the markets right now, we have a severe lack of risk appetite. It seems like metals are the only thing anybody wants. But at the same time, keep in mind that all the normies are talking about metals now. That's not a good look. So I think we're about to see something pretty ugly happen.
Hola Prime, trade with transparency.